Scalping was very hard for me at the start because I was always looking for the trends. Because everyone was giving me advice that trend is your friend and you should always trade with the trend. It is right to the point till market stays in the trend, but the problem is market consolidates 80 to 85% of the time and there are always different market conditions and we can simply just not stick to the trend all the time. So if you really want to scalp every single day, I will teach you all different market conditions and how you can find the trade opportunities in all other states of the market. Let's deep dive into today's video. So the first state of the market is when market is trending. Now there are two ways to identify the trend of the market. The first one is when market is creating a lower low and lower high sequence for the sell trend, and when market is creating a higher high and higher low sequence for the buy trend. Now in this example, market was making lower low and lower high, lower low and lower high, lower low and lower high sequence. That's considered to be a very good way to find the trade opportunity because when market is trending, it's always gonna pull back just like the way it pulled back here. This pullback as well and this pullback. So whenever it's gonna pull back, we can find the trade opportunity. So what I recommend to you when market is making a lower low and lower high sequence and you are waiting for the pullback to happen, add 20 period moving average, which is right here. And whenever market is trending and you're waiting for a pullback and that pullback comes near to 20 moving average, and in case if it goes above it, simply just do not take a trade. Wait until it comes back in, and whenever it comes back in, you can take a trade from this level. And we also have this trade right here. Market was making lower low and lower high, and right when it made a lower high, it also came to 20 period moving average. So there was another trade opportunity here. So there can be a lot of opportunities when market makes a lower low and lower high sequence or a higher high and high low sequence. But what if market moves in a channel? Now channel looks something like this. We have the uptrend. Market is making a move to the uptrend. However, it's a bit of a wide uptrend. It's making a higher high and high low sequence, but it's moving in a general pattern. So whenever we are having this type of pattern, you can always take the trades after the rejections from the high of the channel and after the rejections from the low of the channel. Now, what I recommend how you take the trade is that you always wait when there is a rejection and then comes the engulfing candle, which we can see here that after we had this rejection, look at the strength of the seller's candle, which was a proper engulfing candle. And after that, sellers made a movement to the downside towards the low of the channel. And when it reached, it first got a rejection. And then right after the second rejection, look again at this candle that came from the buyers. It is definitely a very strong buyer's candle. And after that, buyers, they went up. And when they went up, they got rejections. However, right after this rejection, there was no strength from the sellers. So that's why this movement happened. And when buyers came, they got rejected. Then now look at the strength of the seller's candle. That's what you always need to look for when you want to take the trade inside the channel. So you can take a sell position from here. You can take a buy position from there. You can take sell from here as well. And right after this rejection that happened, you can take another buy position. And again, market, it went higher. So these are the two conditions when market is trending. Now, as I stated earlier on in the video that market most of the time consolidates. And during that consolidation, we can definitely take the trades as well. So that's the consolidation movement. Market has been moving inside this range, and whenever it is going to the bottom of the range, it's going to the upside when it's getting rejection. And similarly, when it's going to the high of the range, it's getting rejection. Now, how you should be taking the trade in the consolidation movement? I recommend that you wait for triple top or triple bottom. What do I mean by that is, we know that's the high price and that's the low price. So market, when it first came to this level, it got a rejection. It came back to this level. That was the second rejection, and wait for the third rejection, which is going to be triple top. Whenever we are reaching at this area, we are going down. It happened twice, and right after when buyers came, it's gonna happen third time as well because we got this big of a rejection. And look at the seller strength. Again, there is a big candle from the sellers, which is an engulfing candle. So you can take the trade from here and you can target these lows right here. Now, as we have this low, I told you, you can either trade with triple top or you can trade when you see triple bottom. So we have this first rejection right at the area of low of the range. Then we have this second rejection, and right after this second rejection, when both of the times buyers went up, we got this third rejection. And look at what kind of a candle we got. We got bullish engulfing candle. So you can take the trade from here when you're going to take the trade, and you can place your stops below the rejection, which can be somewhere here, and you can target high of the range, which is right here. And look what kind of a movement happened. Sellers, they did try to go lower, but they could not, and buyers, they came back up and they now broke this high of the range, and market is not in the range anymore. That's how you can take the trades when you see proper ranging market. However, it's a bit of a risky way to take the trade, because let's just say that when you took the trade from here, you put your stops just below the rejections and you put your target at the high. Look what happened. Sellers, they ended up hitting your stops before buyers went up. So that's why it's a bit of a risky, because sometimes you can get stopped out just before market moves in the direction where you wanted it to move. The third market structure that I recommend that you trade is break of market structure. Once market breaks, I recommend that do not just simply enter right after the break. Instead, you wait for it to come back and retest the level which it just broke. This was the strong support level. Market, when it came here, buyers made a movement to the up. Sellers, they came back again to this level, buyers went up. Then sellers tried again, buyers went up. Every time when sellers were coming to this point, buyers, they kept moving up until sellers broke this level to go down. Now, the most common mistake that traders make when they see this kind of a break of market structure, they see that market just broke the strong support level, they end up chasing the market and they take the sell from here. The problem with that, it's fine that you take the sell, but where are you going to put your stops? Above here? And then where are you going to place your target? This can really mess up your risk to reward ratio. So what I recommend, instead of you just chasing the market when you see a break of market structure happening, after it breaks, it's going to come and retest that level, just like the way it retested this level. So whenever there is going to be a retest, right after the retest, you take the trade, put your stops above the retest, and then target at least 1:2 rewards. That's gonna perform very well every single time. We had this strong support level right here. Market broke it. When it broke it, it came to retest, and then sellers continued their movement to the downside. The second example here is we had this strong resistance. Every time when market was coming to this price, sellers kept coming down. When it reached, sellers came down. Again, sellers came down, and then sellers again came down, and this time even with a lot of strength. So when market broke this level, it made a strong movement to the upside, and right after that, I recommend do not take the trade from here when you see a break of market structure happening. Instead, wait for the retest of this strong resistance that market just broke. And when market is going to come and retest this level, you can take the trades anywhere that you want right after the retest, and you can put your stop somewhere below the retest level, and you can target 2 rewards. And look how beautifully the market went up right after it retested this strong resistance. So these are my most favorite market conditions that I like to trade on. I trade with the overall trend. I prefer to trade channels. I sometimes trade triple bottom or triple top inside the ranging condition. And then lastly, whenever market is breaking any sort of structure, I wait for the retest and then I take the trade. So when I mastered these market structures, my trading became much easier. So that's the video that I wanted to share with you. Scalping was very hard for me until I mastered these secrets. So that's it from this video. If you got any value out of this video, do not forget to leave a like and subscribe to the channel. And thank you so much for watching until the end. I will see you in the next one.